right. Hello and welcome to another webinar. It is Friday. It is almost drinks down, or excuse me, mice down, drinks up, getting a little ahead of myself. Almost the weekend here, Super Bowl weekend coming up, and I am incredibly excited. We have a very, very special treat for you today. Today we have Andy Cole, the founder of Mighty Soldier Trades, who also happens to be a Benzinga Pro power user. And today we are going to be discussing how Andy actually uses Pro in his trading. I'm going to give you a little history about Andy. And we're also going to show you some of this stuff in Pro. So I've got Pro pulled up here. Let me go ahead. Andy, are you with us there? Go ahead.
Yeah.
All right. Awesome. So welcome. Thank you very much for being on.
Thanks for having us, Ryan. This is awesome.
Anytime. I think that the best thing that we should do to get started here is you should tell the users a little bit about yourself. Introduce yourself, what you do, and how you got started.
Well, first, I'm Andy, and I'm founder of Mighty Soldiers Trades. I'm an Army veteran. I was watching 9/11 happen live on the TV as it happened, and then as the second plane came through, I decided that I had to do something for my community, my family. I had to step up. Previous to that, I wasn't really sure. I was wishy-washy on the whole Army thing, and they put me in the delayed entry program, which for me was horrible. I thought that this was going to take forever. It was actually mid-November, so it wasn't really that far after 9/11. But I got in there as soon as I could, and I'm from the Detroit area. And if you guys don't know, Benzinga has meetups in Detroit right now. What are they, like monthly, Ryan?
I don't know the frequency of them off the top of my head. Sorry about that. But yes, we do often host meetups at our headquarters in downtown Detroit. And we always recommend that traders come show up and introduce themselves to the community. So sorry, I don't have that schedule handy.
Anyways, to go back to the Army thing, I got hurt in the Army, and I'm not any like war hero or anything like that, guys. I got hurt stateside, and one of the biggest things that I had to deal with is I had to endure and deal with and help a lot of people through memorial services. I actually hosted a lot of memorial services during that time, and a lot of soldiers' wives and female soldiers' husbands that were really having tough times, and we would help them out just in any way we could. A lot of support back then, but I had orders to go to Iraq, and I was told that I could not don my mask due to coughing up blood. It was very disappointing for me. It still is kind of a bummer, but life goes on. I'm alive. I'm here. I'm blessed. I'm sleeping in a warm bed, and that's right. A lot more than a lot of people.
And any day that you wake up is a good day in my book. So I just want to take this time to thank you very much for your service.
Thank you. I appreciate that.
I'm glad that you ended up finding us. I know the road of the past is often scattered with adversity and problems and all that. So I'm glad that you made it here. I really appreciate you taking the time. I love having other local Detroit people on. That's really awesome. And thank you very much for plugging the meetups. That's definitely something that we
I think it's so cool that we have this. I would say that you guys are the best and the biggest retail trading tool, company that there is, and you're only growing faster than I can keep up with, honestly.
Shucks, Andy, you're making me feel all great on this happy Friday before the Super Bowl. Let's go. All right, so that's really awesome. Thank you very much for all of the kind words. So you have like a live trading YouTube channel, is that right? Can you tell me a little bit about that?
Yeah, right now we're just a free live YouTube stream, and we put up videos. One of our biggest pieces of content right now is something that me and you are going to talk about later, which is gurus. And pretty much, we're just trying to provide value here. When I first started this, I didn't really want to even click the mic and talk. I definitely didn't want to put myself on screen. And the biggest thing was, I was so tempted to hide losses. It's like you just, not that I wanted to hide losses, but just tempted to not tempted, just it was hard. It was difficult to get over that hurdle of putting that out there, because it's such a raw, like, you're really putting yourself out there to show, wow, I really screwed up today. I got 5 times my max loss or something because I held some stupid stock, or anything like that. Like this was a really tough hurdle to get around. And yeah, basically we're just here to try to provide value for the community and do whatever we can, let you guys know what it is that we're encountering in the market every day. I
That's
mean,
really that's really awesome, Andy. And what's so great about that is that's exactly what we're trying to do too. We're trying to, we are not the owners of this software, if you will. We are not the bosses. This software is for the users. It's for the people. That's why we're always asking about feedback. We're always asking for what we can do better, how we can do things better, what people are looking for, what improvements can be made, and all of that. So you
a
have
couple
a
things.
very, very similar vision to us. And I think that's one of the reasons why this works out so well.
If you don't mind me saying a couple things, I had contacted these guys and I had brought up filtering by float. I had brought up real-time quotes. I brought up being able to save and such stuff like that, and I'm by no means saying that I'm the only person that was asking for these things, but you guys got to work and you guys had that out so fast. It's like everything that I've needed and wanted, it has been provided within such a short period of time. You guys are working like overtime over there.
I love hearing that. I'm sure the development team loves hearing that. I will absolutely pass that along. We take pride in being able to provide what people are looking for. Everyone trades a little bit different. We're going to talk a little bit about that today. Everyone trades a little bit different. It's impossible to meet everyone's needs, but the way we look at it is that if you are telling us what it is that you're looking for, then we can try to meet as many needs as possible. So starting off with that, Andy, what type? I know that you run Benzinga on the live stream. Why don't you tell me like what you're actually looking at and what tools you use during the course of your live stream?
Okay, for me, basically, there's two parts of this. There's Sarah, and then there's me. For me, I have on the Squawk, which is got to be the most valuable trading tool that anybody could ever have. Benzinga Charlie's got to be an amazing trader. He is coming up with some of the greatest calls that I've seen from any group, and it's simply with you guys.
Mm-hmm.
And I also love the signals with the audible alerts. This allows me to keep my eyes focused on the charts, and I can even look over and quickly, pull up a chart or pull up the news real quick so I can show, our subscribers, our audience, what is going on, what I'm looking at as well, or what Sarah's telling me. But I'm always asking her, what's the news on Fran, Sarah? Okay, can you get the float on Fran? Like, I can look over and see these things too, and I'm doing this myself, but she's there supporting me. She's pulling up all these things constantly. She's doing all the research she can. She'll bring it into the calendar, which is really great because now I can say like, I located shorts on Fran. So, I see Fran hasn't had an offering in quite some time. I'm anticipating, because this thing's spiking and it's been held down for so long. Every time it spikes, it drops, that this is probably going to have an offering shortly, and I'll be able to get right in there. And that's exactly what happened. I'd say a few weeks ago, you guys had a Squawk came across that, somebody had filed an offering similar to that chart right there. And we were right at the top when it came through. I got in there. I did not hold for the whole move at all. I only grab bite-sized pieces. I'm not trying to short the whole thing. I'm not trying to. I'm looking for, anything over 1% on our whole account a day per day. We are focused on profit targets over here, and we focus on percentages, not P&L, and following the rules. That's a whole other conversation we can have in a few minutes, but, just you guys are.
So that's great. Now let me ask you a question. When you're using signals, what signals do you actually use the most? I know that you had just mentioned price spike. You also mentioned halts, I believe. So which of the signals do you use the most?
Well, I have two separate windows, and I would like to even have more windows. I'm probably going to add another monitor so I can do that. Maybe perhaps even another computer.
All right. Well, then let me interject here real quick. One of the things that we're looking for in the pipeline for this year, down the road, again, no specific timeline, but this leads into what you're looking for. We're actually hoping to allow users to put more tools on the workspace. Right now, you can only have a maximum of 4. So we're actually looking to increase that. So it sounds like, based on what you're talking about, especially if you're adding another monitor or even another whole computer, that would be very beneficial to you. So
size adjustments also would be great.
Say again?
Size adjustments also of each window. So
absolutely. Yeah, no, that we're trying to redo it so that you can actually take these modules and move them around. An easier way of kind of arranging your layout, and then of course then being able to save your layout once you've actually arranged that. So I didn't mean to take you off there. Sorry
Oh, I'm
about the
good.
digression. Back to those signals that you use.
Yeah, basically, so we have in one, basically we're not filtered at all. We just have our price spikes and our halt. So we don't really want to limit that. We want to know anything that's halting. We want to know anything that's price spike. We have that as an audible alert. So it comes across, I put it into my ticker, right into my TradeStation 10 platform, and I'm good to go. And I can see, is this something I want to trade, and how do I do that? At first, obviously, I'm looking at the 5-minute. That's where I get my primary idea if this is even a viable option for me to trade. And then I'm going to go up in time frame to the daily. And I'm looking at, on the daily, I'm looking at something, obviously, if something has been trading down and it trades down every time it spikes. If you have a solid green candle, for example, candle with trends, or if you have a star in the sky, just a little daily star in the sky, that's a very, very uncomfortable situation when you get a 30-cent stock that's up to 970 and it's this little star in the sky on the daily,
Yeah.
Other than that would be barcodes. If it looks like it's a highly controlled situation, I am very weary of this, because this is the kind of plays that I get myself into that are more of the uncomfortable. I have to wait for a very long time to see the light of day. And it's not like I'm being taken down very far, because I'm buying them at more opportune moments. I'm looking for the greed. I'm hoping for, a really nice greedy pullback. The greedier, the better. And I'm grabbing the bottom of that. And I heard you had told me also that you are a bottom ticker as well, which
Yeah, I try to I try to follow the very simplest principle of buy low, sell high. Steve and I joke about it all the time when he's on, but that's the principle that I'm always trying to follow. Being a long investor makes sense to me, so I try to stick to that. And obviously, when you're going long, buying low and selling high is ideal. So, real quickly here, I actually forgot to mention this at the beginning. I definitely want your questions. Send us as many questions as you can. I will try my very best to answer them all. At the end of the webinar, we'll probably set some time aside for question and answers, in particular if there's a whole bunch that I've got that I haven't answered. We do have one question here. Will we be able to use multiple monitors for the screens? Yes, you will be able to pop the different tools out. You can actually use the detach function right now like this, detach some of the different tools and then move them to any monitor that you have. I actually am currently running 4 monitors right now, and I can very easily take this signals tool and move it over to the next monitor. So great question, Christy. Yes, you will absolutely be able to do that. Obviously, the more tools we allow into one workspace, meaning that if you have like a high resolution 4K screen, you might be able to fit 6 tools comfortably on there. So great question, Andy. Again, I'm sorry to interrupt and digress there.
no problem.
Please keep the questions coming. And if I miss them in the flow of the webinar, we'll try to get back to them at the end of the webinar.
Well, as far as what you're saying right there, we do that right now. We in our pro platform, we go over to where it says, let's say, movers. Sorry for looking at my monitors to my left.
Oh,
here.
you're totally fine.
But we click new window rather than in workspace, and it will just pop out like you said, and then I will pull that over onto my main monitor. That way it's not obscuring anybody's vision on the stream, and then I can adjust whatever I need to. Sometimes I'll adjust it in there if I get it out of the way, but and then I can pop up another one, so I can have a news feed if there's not room for that, or I can have movers if there's not room for that. So and like you said, you're going to make room for that, so that's amazing. You guys are always, like I said, just right on point, bringing basically, I mean, the way that I see it and the way I hear it, you care about the bottom to the top, starting at the bottom. I'm not saying that you don't care about the top, but you really do care about the new traders, retail traders, and experienced traders alike. This is a platform. I have a friend that I just met recently. He's more of an investor than a trader. And he saw the pro platform and he said, Andy, you are far more sophisticated with your setup than I am. He says, what do you have going on there? And I said, I will definitely show you everything about it. I mean, I think that when you see this and you understand the power of this, it's going to change the way you trade, because right now he's looking on each individual website for all this different material, trying to bring it together, when you've already done that right here in one package.
I was going to say, I'm really glad that you mentioned that, because that's part of the whole goal here, is that we want to try to get as much information as possible and bring it into one central location so that you don't have to waste time searching for that information. Just taking a look, like that's the whole concept of the details tool here, right? So I have it pulled up for a chart here. We're looking at ticker SNDX, but there's a whole bunch of other information that you might need instead of this chart. You might need key data. If he was investing and he was looking at the fundamentals of the company, he might need to review key data, or he might need to review different financial statements. And these are simply on different tabs so that you can very quickly move to and from them. So that's a really good point. That's definitely something that we try to do. That's part of the whole ethos of this platform. Now, I did already get a question here from Nathaniel. Do you believe in averaging down as a long biased investor, Ryan? This is hilarious, Andy, because you and I actually discussed this yesterday. Just yesterday we discussed it. So I'm going to go ahead and answer, and then I would like you to give your thoughts on it as well, if you don't mind. Do I average down? The short answer is no. The short answer is no. However, as always, there are exceptions. And let me explain what I mean by that. If I'm investing for something for the long term, then I already have a time horizon set out. And if I'm investing for the long term, I've already at minimum created a mental stop where I cannot hold this stock any longer than, if it starts going against me, any longer than, whatever that price level is. It's different for every trade, of course. So when it comes to averaging down is a sign that the trade is not working. Now, obviously, if I buy a stock today and then tomorrow it sells off and then the day after it sells off, but I bought this stock to hold it for a year, those are 2 days out of 365. So that's not really a big deal. Now, as far as averaging down goes, I normally don't like to do that, because then what I'm doing is I'm leveraging myself more in a position that isn't working. Instead, when it comes to investments, I prefer to average up, because that means that the stock is appreciating and things are going according to plan. I'll give you an example of something that I've been an Apple stockholder for the past 5 years. I have added to my Apple position several times, and I have sold 0 shares. So when I first bought it, I believe my price was 92. I ended up adding, I believe, at like 95 and then 98. So I have an average in I think the 94 to 96 range. And the reason for that is because I felt for sure that this was actually going to move up. And then it started to move up more and more. And I actually added some more shares down, I think around 140. This was about a year later. So I added some more shares around 140. I don't like to average down, because if something is moving against me, I don't want to increase my exposure to something that's going wrong. One of the biggest problems, or one of the biggest things in the market, participants in the market face, is admitting when they're wrong. It's a natural human tendency. Andy kind of touched on it at the beginning of this, saying he didn't want to show losses. When someone first starts, no one really wants to show failure. You want to keep pumping yourself up and say, I can do this. I want positive reinforcement. I can do this. But it's important to realize that when something is not going according to plan, your best bet might be to get out. There's an old adage in the stock market that says your first stop is your best stop. And that is absolutely true. So I generally don't try to average down. Now, the caveat there is if I'm buying something for a short term and I get a sell-off that either A, doesn't make sense, or B, I think is going to be short-lived, yes, I will in fact average down with the intention of very quickly getting out should the trade turn in my direction. I will say this. Whenever I average down, I also do something else. I also tighten up my stop. Let's say I buy a stock at $5 and my mental stop is $4. I'm not willing to risk any more than $1 of max loss. If it starts to trade down towards 4 and I add at, let's say, 450, instead of leaving my stop at 4, I would probably move my stop up to 425 or something like that. Because now that I'm adding more leverage to something that isn't working, I want to also give myself a very clear exit in case this continues to work against me. I don't ever want to try to swing for the fences, and I don't ever want to wipe myself out. Protecting your capital should always be rule number 1, especially as a new trader. So Nathaniel, I hope that answers your question. Andy, sorry about the long-winded answer. What do you think about averaging down?
Basically, for me, I agree with you. Averaging down, averaging down in the sense of averaging down is you should never be doing this, right? because obviously you're just adding to a loss that's making you more vulnerable for a bigger loss. Now, what I would say, that goes completely possibly against that, some might believe, is sometimes I will put on a very small position in hopes that there would be greed against my position really fast. And then I will put on my real position at a lower point. And when I do this, though, the thing is, I've already assessed my max risk on this play. I'm not looking at this like I'm averaging down and I'm going to keep on doing that to the bottom and hopefully at some point it's going to pop, because these stocks never have to pop. You can hold them for days, weeks, years. Trust me, guys, I have been the bag holder. I have been the averager down all the way to the bottom. I felt and experienced exactly what's going on. In fact, one of my strategies is I'm looking for averaging down to understand what this stock's doing on the 15-second chart. And I know that there's some people that are kind of don't really like the 15-second charts too much, but I look for, as it's stair stepping down, I know where somebody has averaged down pretty much, and that if it doesn't break that spot, it's not letting them breathe air, so to speak, not putting them back into profit. It's not, it's not really interesting to me in a long bias situation. And that could be a reason to maybe go short the play, but that's a whole other situation. I require a lot more to go short on a stock than I do to go long. I believe you said the same thing, right, Ryan?
Yeah. The only caveat there is that I actually don't short at all. I never short equity. If I'm going to play for the downside, I actually buy puts. So that would be the only caveat, but absolutely.
Yeah. So, I mean, as far as averaging down, it's not recommended. And, for rules, if it breaks a chart pattern, my rules are that, so okay, first, I don't want to be a hypocrite. I don't want to say that I'm perfect and obey these rules completely to the T all the time. It is very hard as a trader to do this.
Yeah, absolutely. So I actually will take one of the questions that's in here. So quick question from Stefan. Is it a possibility to change the time within Benzinga, or do I have to change the time on my computer? This is a great question. The time in Pro is going to default to your computer's time, with the exception of the calendar, which will always show you Eastern time. It is in our development pipeline to add a setting so that you can actually change Pro to any time zone that you'd like. So that is coming. It's not available right now. The only option you have is to have it default to your computer's time, but that option will be coming. We definitely heard from our folks across the pond, so to speak. They definitely want the ability to change the time setting in Pro, and that will be coming. Steve also asked, do you use time and sales? So yes, I do. For the most part, I actually do swing trading or intermediate trading or investing. So I'm not the biggest day trader out there, but occasionally I will day trade. I actually tried to play Intelsat the other day. I bought some shares that had the huge downdraft. I was like, oh boy, this is trouble. I'm near my stop already. I actually averaged down, bought some shares, and then on the spike back up, I actually exited there. And my entire plan by doing that was to say, okay, if this is going to go against me, then I'm going to try to play for a very quick bounce and at least give myself some more leeway. Well, it turns out that Intelsat continued to sell off, and eventually I just actually closed my trade out for a loss. I believe that was a 2% loss on the capital. So it wasn't terrible, but it certainly didn't work. I definitely took my lump in that particular time, but in that example, I actually used the time and sales. As soon as I was seeing that sell off and I saw some buying volume come in, I was like, okay, I'll pick up a little here and I'll see if I can sell it on any type of bounce. The bounce came, it was very short-lived, and it was not an aggressive bounce. I got out, made a little bit of cash, felt pretty good to hold the stock a little bit longer, and sure enough, the stock continued to sell off. So again, that's another reason why averaging down, if you're going to do it, be very, very careful and have a lot of your guidelines set ahead of time, because you don't want to get into a position where you were down X amount of percent, and now you're down even more because you added on top of that, and the stock is still going against you. So hope that answers your
Ryan,
question. Yeah.
If you don't mind, I'll talk about the time and sales real quick, and then I'll get to that last question from, I believe, Arthur there.
Absolutely.
But basically, time and sales for me, that is where I find the momentum that I need for the play. I need to see how much is flipping through that time and sales to know if this is a good moment to get in or not. I need to know how much control it has. Like we were talking about before, I'm also looking for the halt monitor to, whatever you want in signals, the halt scanner and signals to pop up, so if there's a stock halted, I'm putting in automatically to my charts, instantly to my charts rather. So, and I was telling you that, when you see a wall right above it, a large wall growing and a
Hmm.
large wall right below it, and it starts to, it's ever growing wall and it's going down, it's ever growing, and it just consistently is like 26,000, then 300,000. Maybe it just stays within that range and
Hmm.
it's just eating it and flipping through. That's going to be a halt. I call these halts all the time. Just, and all of a sudden, there we go. We got a halt on this coming through the audible alerts here. And
That's really impressive too, because I'm not, and this is exactly what I talk about everyone trading a little bit differently. I actually do trade some halts. I will day trade stocks that are coming out of halts, but I do not have nearly the ability that you do in the order to predict them. That's so cool that you've actually found indicators where you're like, oh, I think that this is going to halt here, and now you're able to take advantage of that. That's excellent.
Yeah, well, the thing is it lets me know, and I've been able to actually get out of the right when it's halting, because it's bouncing between those within one penny, and you see
Hmm.
the ever growing walls,
Hmm.
and you just by chance might get filled within that huge number. So you might be able to get out right at the end
Yeah.
before the halt actually comes through, and that's very beneficial, because a lot of these, as okay, I got into a situation, I can't remember which one it was. Yeah, I can't remember the stock right now, but it had halted. It halted news pending. It was halted for like 3 or 4 days, and you got to imagine your money's locked up in jail for 3 or 4 days. Your capital is, you cannot use that. And when it come out of the halt, it opened up 80% down. And at this time, I was using, I think, I don't know, maybe upwards of like 15 to 25% of my account on that one trade,
Hmm.
at that particular moment for that particular account anyways. And that was horrible. If I would have held that after it came out of the halt, I probably could have recovered some of that, but there's just no reason to hold any of these. There's no guarantee it's going to bounce. And, you know,
And
just,
that can make for some awful sleepless nights, let me
oh yeah.
tell you. It could really, and we're going to talk about that in a little bit here too. Emotion, trader emotion, and how you deal with adversity absolutely affects everything that you do throughout the course of a trading day. So real quickly, let me catch up on some of these questions here.
The
Filtering
15
by
second
flow.
one,
I'm
Ryan,
sorry.
the 15-second one, if you don't mind.
No, not at all.
No,
Go ahead.
I actually did mean the 15-second. When I pull up any of my trades from, I use the TradeStation 10 platform. They have one tick, they have 15-second. I believe they have 30-second. I find 15-second is a really amazing chart to add to your intraday, especially scalp trading, because you can see the new resistance forming as it's coming through. The same chart patterns you see on the bigger, the daily and all that. These actually do come in to take, you can trade off of these on the 15-second. Now, I would never just trade off the 15-second. I'm
Right,
obviously
right.
looking primarily at the 5-minute, the 15-minute, and the daily is my overall as to what this really is, if I'm going to even mess with that at all. But yeah, I did mean 15-second. 15-second is really great for that. And another thing I'd like people to know is, if you do try this and you are intraday and you're particularly very short term on your trades, which we want to get in and out and be done, just relax, not have all
Mhm.
that stress, like you're saying, sleep at night. But the 65 EMA on the 15-second is just about the most reliable moving average support and resistance that I have ever found. Now, I understand, I'm guessing that you can probably find something like this with the 1 minute and see somewhat of what I'm seeing here, but it really doesn't do the full trick.
Absolutely, and so I'm actually glad that you mentioned that. Let me get back to that in a sec. I just want to finish off a couple of these questions here. Filtering by float is available on movers, but not on the newsfeed. Are there plans to add this feature to the newsfeed? Yes, there is, and that should be coming soon. We're actually calling that the advanced newsfeed filtering. Not only will you be able to filter it by float, but you'll also be able to filter it by price, market cap, and the goal is to be able to filter it by any variable that you see in the screener. So that is coming. I don't have an exact day for you, but stay tuned. That will be coming. It's a huge point of emphasis for us right now. Will this webinar be available to review later? Yes, it will. We will be posting this on the help site for all Benzinga Pro users to view at their leisure whenever they want. Andy, do you know if you're going to be posting this on your YouTube channel channel, you're certainly welcome to.
Oh, I would absolutely, yes.
Okay,
Definitely.
so you will be able to get it at both of those spots, both on the, and I believe we'll also post it to the Benzinga YouTube. So Benzinga YouTube, Mighty Soldiers YouTube, and the Benzinga help site. The webinar will be available later today after it's been edited and rendered. So
Just as soon as I edit out all the worst parts with me and leave all the worst parts of you, Ryan, that's when we'll post it on our YouTube.
Fair enough. Fair enough. Also, where can I find all of the archive video recordings? Another great question. So let me just take this real quick. While you're in Pro here, in the very upper right corner, let me move the video here so you can actually see it. In the very upper right corner is a little question mark inside of a circle called Help. And if you click on that, it will bring you the Help menu. You can click on Visit Help Site from the Help menu. That will load up the Help Site in the browser. In here, you can view the tutorial videos, the past webinars. This is where today's webinar will be later on when we get it uploaded. It'll be in the past webinar section. And we also have pro tip features and pro tip videos. Pro tip videos are designed to be shorter so that you can get the information you want quickly. And then also, don't forget, Big Beats watch lists are all the way at the bottom. Those are very, very popular. You're very welcome. So let me go back over here to Pro. One of the other things that I wanted to talk about when it comes to, and sorry, I was just playing around with some of the indicators here. When we're, just to go back to like the Apple trade that I was giving you, and then also the example of averaging down, let's take a look at this chart here, because Apple, this is an example of something that I averaged up in, all right? So you can see here, we're looking at from 2017 to today, and you can see that the low of this particular chart is about 108 and the high is the 316 that we're at here. So if my initial position, I believe, was $92.37. So if I'm long at 92 and this starts to tick up, all right, and I get all the way up as high as 232 and then this sells off again, there's two ways to look at this. Number one, you can actually add on this sell-off here. And the reason that I would consider doing that is because, again, even at the peak of this sell-off here, we're at 144. That's still above my cost basis. In fact, that's still 50% above my cost basis. So I'm in quite a bit of profit there. This is an ideal time to be able to add this stock. Now, this looks like this was December. We were really going through a nasty sell-off December of 2018, right before the new year last year. So it's not, looking at the chart in retrospect, it seems easy to do this. It's not necessarily. But conversely, let's say you bought right here at 230, all right? And then the stock sold all the way off to 140. You're down almost 100 points. Is this, unless you believed in the long-term vision of this, which I did and still do, unless you believe in the long-term vision of this, this is not something that would necessarily be safe to add in. You're already down 100 points from your entry. You don't have the benefit of seeing what this stock is going to do over the course of the next year. So really what this comes down to is your confidence and your belief in this particular trade. For me, I believe Apple is a monster. When I say monster, I mean that in a good way.
Got that right.
They create amazing products. People love them, use them, upgrade them. The business is great. And they're also very socially aware, which in today's market is something that's very important to some investors. So this would have been an opportunity where I absolutely would have added on this sellback. In fact, I believe I did. However, if you opened your trade up here in the 220s or the 230s, maybe you don't want to do this. Now, had you have, of course, hindsight's always 20/20. Had you have added there, you could have averaged down and this thing took off and you'd have had even more profit. So that's what lures people in. That's the siren song, if you will. Conversely, let me see if I can find a different chart. Let me see if I can. I wanted to see if.
Real quick on that Apple one.
Yeah, go ahead.
We had bought and we had cut our losses rather quick on that, and then we totally missed the bottom and never really got to get back in at that point. But yeah, I mean, I just felt a lot better just getting out and cutting those losses, and like you said, being able to sleep at night.
Yeah, that's a huge thing. Being able to deal with the emotional stress and just the emotions of trading in general. That's a huge part. And I guess this is a good segue to go into this. Let me finish off here real quick. So I brought up a chart of Goldman Sachs here, and this is obviously the way I look at some of these large cap. I don't think that any of these companies are really going to close their doors unless there's a huge event, something catastrophic. I don't really think that these companies are going to close their doors. So when you talk about averaging down, it's different if you're looking at a long cap stock versus a mid cap or a small cap or a micro cap stock. I mean, Goldman Sachs, I'm pretty sure 10 years from now is still going to be in business. And that's a long time. So, I mean, it's different. If you, again, if you buy at the top, even if you, let's take a look right here. So back in January of 2015, if this Goldman Sachs sold off from about 194 to 173. So let's say you tried to buy this at the bottom. Right away, it's going to look great, but then it goes down past your entry. Is this really where you want to add? The way I would contest that, I would say no, that's not really where you want to add. If you had a stop and you want to abide by your stop, then that's fine. So if you're buying at, let's say, the 178 handle and you're going to risk down to 150, if you bought here and then it sold down and you averaged down and you bought again, this went right through 150. In fact, this went all the way down to the 139 handle and 138 handle. So even after that, it was able to recover and put you in profit. But again, what we're talking about here are emotions. And when you take a large sum of your money, whatever it might be, you put it into a position and you see it go red and see it go against you, that affects you. The better you are at dealing with that means the better a trader you're going to be going forward. Everyone struggles with this. It doesn't matter if you're a brand new trader who started yesterday or you're someone like Big Beat who's been trading for 27 plus years. No one is ever right, and you have to be able to handle adversity. When something works against you, you have to be able to handle that. And for me, one of the things that I realized is that averaging down on things that work against me actually made me more emotional, made me more nervous or more paranoid.
Absolutely.
So what I do is I try to average up when the stock is appreciating. So going back to this example here, let's say, for example, you did actually buy in here in the 180s. All right, it went down, but not enough to stop out. And then it showed you promise. Your trade started working. It's even possible that you got out in the 200s, 210s. But let's say it went back down. If you don't get stopped out, look what happens. As it starts to trade back up, as you go into green again, there's going to be earnings reports. There's going to be other information that you can figure out about the stock to see if your thesis is still intact. And then once it trades up again and sells off again, now you're already in profit. Remember, if you bought down here in the 180s and now you're watching it sell off from 250 to 230, that's still 20 points, but you're still in profit. So it might be, and this would be an opportunity for you to actually add, because you still have more downside cushion should this go against you. And look what happened. Sure enough, at the end of 2018, like we were talking about, we went from what looks like 227 area all the way down to 150 area. That's 70 points. That's a lot. And if you're not prepared to deal with that, you might make a trade that you'll regret later. Sorry about the long-winded answer there.
As far as that chart right there, that's what I was saying about my rules, you know, and like I said, this is a work in progress. Every day we are fighting to basically get in line, but you see there's twice you see head and shoulders, right? And when it breaks below that support area, that's a broken pattern, or in this case, a fulfilled pattern, bearish pattern, you know. So if you're long in that's a broken pattern. You want to be out at that point. You can consider adding at the bottom, wherever that may be, if you're so lucky as to find that, which, you know, I love that. That's the one thing I really love is, like, you know, I'll say it again. Bottom ticking is just, I feel like Michael Jordan when I do it. You know, it just makes my day every time. I don't even have to get that much profit in it. You know, just knowing that I've bottom tick that chart. It's like,
yeah, I don't bottom tick many, but when I do grab them when they are on sale and then I end up selling them at a premium, that is a immensely gratifying feeling. I'm completely with you there. Now, so you very quickly, I do want to get to this emotion thing in a sec, but I just want to finish up. You had mentioned the 15-second chart. For intraday, I generally use the 1-minute chart, the 3-minute chart, and the 5-minute chart for intraday trading. Anything that I'm going to do quickly, like a day trade like that. And then I also use the 15-minute chart and the daily chart to kind of plan more long-term. Like if I'm trying to figure out where support and resistance are, I always use a daily chart. Even if I'm going to use a different chart, even if I want to find intraday support and resistance, that's fine. I still need to have a bigger picture from the daily chart. So I use that in pretty much everything that I do, even if it is a short-term trade. So just to recap, I use predominantly the 1-minute, the 3-minute, the 5-minute. And then I also use the 15-minute and the daily chart. So Andy, I know you had mentioned the 15-second chart and the 5-minute chart and the daily chart. Are there any other time frames that you use on a regular basis?
If I'm looking at a swing, I always look at the weekly. If I'm checking out, you know, an index, if I'm looking at the IWC, the IWM, or something like that, I'm going to look at the daily and the weekly. The
Absolutely.
weekly is a really big one for me on those. But as far as my intraday trading, I'm always looking at the 15-minute, the daily, like you said, the 5-minute. And I used to be a 1-minute guy, but then I got TradeStation and I saw these 15-second charts. And I'll be honest with you, I thought 15-second charts were garbage. I thought there was no reason to be using them. I thought that anything you saw in there would be a bunch of noise rather than real patterns or real support and resistance areas that you can logically predict areas of capitulation in these charts. You can. It's there day after day. I post on Twitter sometimes just to show people, like, look at these ridiculous 15-second charts and how they respected the 65 EMA the whole way, guys. And if it breaks the 65, it's usually always bouncing off the 200. So you can almost always get a really quick scalp off the 200, even if it is going to continue past down further through the 200 day. It usually always reliably bounces at the 200.
That's a
So,
really that's a really great point. The 200 day is absolutely one of the moving averages that I have set up on all of my daily charts. It's massively important. I would also add the 100 day and the 50 day to those. Really great point. One of the things that I wanted to talk about when it comes to, we've talked a lot about support and resist, being able to play trades as they approach their support. In this case, a 200 day often provides very ample support for a stock, especially when it's selling off. And like you said, it may, even if the bounce is short-lived, you may still get that bounce. And that might be all you need to get a little money in a particular day trade. So that support and resistance is great. One of the other things is that actually helps with emotion. If you, the thing about charts is that you can draw anything you want on your chart. You can make a chart say anything. You can come up with head and shoulders. You can draw inverse smiley faces. You can do whatever you want to try and come up and create a situation where it fits your narrative. The thing about a chart is that you really want to do things that you can understand. You want to make sure that what you're doing fits your trading plan. You want to make sure that you're comfortable with it. The 200 day is a great example. That's something that I'm comfortable with. When I see a stock selling off and it's approaching the 200 day, I'm comfortable risking some money right there to try and play for a bounce. As you had mentioned, the 200 day is a huge support. Now, when it comes to actually dealing with that, size also matters. Right. So, Andy, I know that you wanted to talk about position sizing. Is that correct?
Position sizing is key. Position sizing is everything. See, I mean, I often hear a lot of people say, I'll never take a trade like that. I'll never take a trade like that. And I understand, I've been burned on a lot of these too. But if you have the right position sizing and you're not trying to get rich off of every single trade, you can nearly take any trade you want. And I can tell you that's where I got my edge. Earlier on with my trading, I would say that I was very inexperienced all the way up until TradeStation is what really brought my trading to the future, pretty much up to speed, because they had offered for military TradeStation salutes, which is $0 commissions. And at the time I was kind of like, wow, this is such an edge that I'm not even sure, I should tell people this, but I'm like, there's other people this can help. So I told everybody I could, but anyways,
way to go.
It's like, at first though, it's just like, I'm doing something that was not available at the time. And this $0 commission world has changed everything. You don't get into, the fastest car on the market when you're a new driver and just floor it and go through the garage.
That's right.
You take it and it's as slow and easy as you can. So if you start with very small position sizing, like I hear people paper trading all the time. Paper trading is going to be great for learning your platform. Obviously, you can probably confirm this. Order execution errors are just about the number one way to lose money when you're trading. Maybe your platform even freezing sometimes. I hear a lot of platforms freezing.
And it can be as simple as I meant to put in a limit order and I put in a market order and I ended up not getting the price that I thought that I was going to get. So, I mean, that's huge. And being able to practice that and know exactly what you're doing and have confidence in what you're doing before you actually start for real, that is very, very beneficial. But Andy, I completely agree with you. Paper trading, if you're trying to buy 10,000 shares, your fills on paper trading are not real. To fill 10,000 shares, even if it's something liquid, is going to be different than filling 10,000 shares in a paper trading environment. And you don't even need big numbers like 10,000 shares. any shares. Remember, if a price, if in a paper account, if a stock is priced at 25.25 and you have your order in for 25.25, you're going to get filled. In the real world, if there wasn't enough volume to fill your order, you may get a partial fill or no fill at all. So paper trading, there definitely has its place. Try not to rely on that too much. One of the things when we're talking about position sizing, I wanted to show is an example here on this chart. Here's an example of Acceleron Pharma, which looks like it popped from 52 all the way to 78 on enormous volume back on January 28th. I'd actually have to pull up the news. I'm not sure what happened here. But basically, this would be, if you, let's say, for example, you don't know off the top of your head, do you, what happened on January 28th?
No, not on this one, no.
Okay, no problem. I can actually go look that
up.
up.
Hold on. Acceleron, yes.
Yeah, Acceleron. So
they had phase 2 primary and secondary endpoints.
Okay, there we go. And it also looks like had some analyst rating changes that gave it lofty price targets. Okay, so perfect. So there's an example of I didn't know why the stock popped within 5 seconds. Within 5 seconds, we were able to figure it out.
I tried to put my order in short on that one. It had ticked to 105 on the ask, and it had 101 on the ask, but it didn't tick. It displayed on the ask. Anyways, I tried to get short at 105 and 101, but it never actually ticked above 100, I believe. So I didn't get my fill on that one. And then once it pulled back, I said, I don't know what this is going to do after this. It's no longer a viable option for a short. It would have been a great short, but it's just not, if I miss a trade, it's just move on. Don't
dwell on it. I'm with you there. There's always opportunity. There's always opportunity around the corner. And so let me come up with a hypothetical situation to illustrate position sizing using this example. This stock has a huge pot. There's a huge gap here. So what you're talking about with the whole short thing, this gap, there's a tendency for this gap to at least try and get filled. So I totally understand this stock pops here. We're not, I'm not a bio trader, so I'm not necessarily sure on that endpoint or what that phase 2 study or whatever that was.
Yeah, this was after hours. It came through the news.
Yeah.
And that's why you're seeing it on the daily like that. But this is the daily, right?
Yeah, this one's the daily. So here's the thing. So if you were going to take this and you were thinking, I might swing this long, maybe these trial results are very positive. Maybe this company has something planned that sounds great. Remember, one of those, if we go back to the news feed here, one of these analyst firms, Piper Sandler, gave this a price target of 135. Credit Suisse gave this a price target of 99. So if you were back here on the chart and we're looking at that and we're thinking, boy, this thing popped and closed what looks like it closed $79 here on the 28th. All right. And you're thinking, boy, $99, 135, there's definitely more room here for this to go. You might be right. When you're up this much, the other tendency, the other guy on your other shoulder might be saying, but this might fall. This might be a short.
Central gap fill here.
And the way that you can actually play this is lower your position sizing a little bit. Scale back on how much that you would put into this trade. If you were going to go long, maybe buy half your position. That way, if it sells off, A, you're not down as much. B, depending on what the reason for the sell-off is, you may want to add. We just talked about averaging down. That may be a part of your plan. It may not be a part of your plan. And then if it does what it does here, where it looks like it took off, went from the 79 handle, we're trading in the 90s today. So even if you had a half a position on, you're at least able to capture some of that gain and you didn't risk as much going forward. It might be easier for you to hold this trade because you simply don't have as much risk on the line. So when it comes to position sizing, it can work in both directions. It can work if you're short. It can work if you're long. It's always, always important. And it's absolutely something that you want to work on and keep track of every single day. Andy, you said it's the most important thing for you, right?
Well, I mean, I absolutely, because like I said, I got stuck in a halt that opened 80% down. You imagine if I would have had 100% of my account in there or some huge amount,
that would have been a bad day.
I'm sure you probably remember MTSL also. All day MTSL had rose to huge numbers. I mean, this was quite a while back, so I'm not sure what you're going to get here, but yeah, I believe it might be right there.
I think this is it, July of 18.
Yeah, anyways, either way, this thing was just a monster all day long, and it just kept on growing and growing, and then all of a sudden, in a split second, it could have been an offering, probably. That's why you need Benzinga Pro, guys. This calendar is amazing, but if I would have had if I would have been looking at that then, I probably would have been more prepared. I did not get destroyed on that. I got out, but still, it just dumped all the way to the ground, all the way to the open within like a couple seconds. It was obliteration of everybody. This thing looked like it was going to beast out for weeks, days. It was going to BPTH, if you remember that one, $72.
Yep. Oh yeah.
In the same thing, like all these trades, if you're in Pennyland especially, you might as well just keep it in your mind, no matter what the news is, no matter what, you're trading garbage. I mean, it may not be a garbage company. The company might do great things, but the way these things trade, and there's a lot of working parts that you have to consider,
I actually tried to pull up one here that I remember. It's OTC now, so it's not part of the library here. But yeah, that I was trying to pull up Elfin. I was trying to pull up Longfin stock that went from like 13 to like 70 in the course of a day. And it's like, how, even if you want to trade that based on the technicals, even if you want to trade that, how do you enter a stock that was $11 2 days ago, and today it's $40? How do you enter that and feel good about that? The only way that you can really do that and handle your emotions, lower your size a little bit so that you're not putting all of your account in there. Chances are that this is going to be volatile. There's going to be more movement ahead. So it's a tough thing to do. Battling emotions is something that you will do every day. Position sizing, definitely one way to keep that under control here.
Well, one thing I would say, if I could throw this in here real quick.
Absolutely.
When I wake up in the morning, I want to drink a big glass of water, maybe a couple. I want to crank the shower on ice cold. I want to do whatever I can, do some pull-ups, some push-ups, jog in place. I don't know, whatever, take a walk, brisk walk, anything. Get the blood pumping, get myself to where I'm actually able to focus on what I'm doing, not just come right out of bed, and I'm all foggy and I'm feeling like garbage. And because then, that, like I told you, the audience doesn't know this, or perhaps they do. Some people that are in my stream, my beginning of my losing streak, I've actually lost like 5 times within the last 4 weeks or so. And because of that, or the beginning of that, I was sick. I came to the desk, I was sick. I decided to go ahead and take the trade anyways. I went right back to the infancy stage, and, pretty much, I paid for it ever since. And I think that another thing is I was really doing great all the way up until that point. So that's like, when you're up on your winners, everybody says this, that is your most vulnerable point. When you're doing really good, when you're flying high, when you're just knocking, I was hitting 14% months, 10% months, no problem, easily. And then all of a sudden, boom, it's just, so if you're, and another thing, beginning traders and a lot of traders, they're focused on getting rich. They think somehow day trading is just for getting rich. No, day trading is for being a good trader. If you don't love trading, if trading's not your thing and you're just here to get rich, you're likely just going to lose everything anyways.
That's right.
We're here because we love this. This is in us. We couldn't stop if we tried. I believe I can speak for you on that one as well.
You're speaking for me 100% accurately. The thing is that it's not, if this were easy, everyone would be doing it. So you really do have to like it. And the other thing is that I've never talked to a trader, or excuse me, let me phrase that a different way. Every trader that I've talked to, almost all of them, they've said their biggest lesson came on a loss. Winning feels great. Getting more money feels great. But getting to that point is sometimes difficult. And you often learn your best lessons on a loss. What were you going to say there, Andy? I'm sorry.
I was just agreeing with you. Losing is what makes you a better trader. We meditate on our losses every time. I mean, I would get a big loss and me and Sarah, we'd go walk a trail or go to the lake or whatever. And the whole time we're sitting there saying and going over, okay, what did we see on that trade? What did we not obey as far as our rules? What was really going on with the news? What did we miss? Just anything we can go over. And we would come back to the charts later that night, come back to the news feeds, come back, like you said, to we can go to the calendars and just see what was it that we were missing on that, so we can make sure we're not going to miss that next time. And I'll be honest with you, when I started with Benzinga, I didn't fully understand, even though it's so simple, I didn't understand the power in this platform and everything that it had to offer. And, the more that I took a loss here, I find that, wow, you guys have the answer to this. You have the answer to this.
And so what I was doing while we were talking about that is I actually pulled up the movers tool because I want to get an idea of something that's moving, and I shifted it to losers. And I found NTech here. This is actually a stock that I've traded years ago. And this met a lot of the criteria, a lot of the things that we just talked about. So first of all, I clicked on it. Benzinga Pro is telling us why it's down 35% today. It's saying Intech pharma shares are trading lower after the company announced the common stock offering. Hey, how about that? Didn't we just talk about offerings? All right. And so then what I did is I actually clicked on it. It loaded it here in the chart. And now I'm taking a look at the chart and I'm thinking about how I would have traded this if I was watching this live. So number one here, we have a huge gap down. Looks like we gapped down from 290s to 51 cents. So I'm not quite sure what happened there. Looks like there was a lot of buying too. That's probably trying to catch it for a bounce. So I can see why someone would do this. And if you did buy this here at what, 57 cents, looks like over the course of a month or two, couple months here, you could have actually got all the way back up to $1.50. You could have done 200% gain on your particular trade. But look what ended up happening. It tried to test this gap. It actually didn't fill the entire gap. And now not everything has to happen. All right. So just because this stock went lower and then started to turn back up doesn't mean that this gap for sure is going to get filled. And look what happened. It actually sold back off. Wasn't much interest in it, and now here again we have another offering here. So this is a great example. This kind of brought all the things that we talked about together and can show you what some of the problems can be. In this particular case, this might have made a decent bounce trade, but at the same time, obviously there's something going on here. We have another offering today. This thing just looks like it's down, just an absolute bloodbath here. So, but you can gain all of this information using Benzinga Pro.
Ryan, I have a question over here that it gets me pretty excited.
Yep.
And I would love to answer this. How are the fills at TradeStation? The fills at TradeStation are above anything I've ever seen. I'm not even saying this. I love TradeStation. The fills are super awesome. And the coolest thing about TradeStation is, like I said, they offer TradeStation salutes, $0 commissions for anybody who's served, is currently serving, has served, veterans, first responders, anybody. And if you don't mind me saying so, there is a code that you can use for that. It's I don't know if you want to type this in, or it's 0147 Alpha Foxtrot November Whiskey. And you can use that for the TS salutes. And then also we have a link on our website, on our resources page, mightysoldierstrades.com. And you can go ahead and click if you're a civilian, and they'll give you, we're a member of their rebate program. They'll give you, I believe, 20% of up to $1,000. You'll have to ask them for the exact details on that, but you will get rebates on your commissions on that. I would say you would surely not regret going with TradeStation. TradeStation has taken care of us so well, and just there's so much more. And honestly, to go along with Benzinga, we have our hot lists over there that are also bringing us trades, and we're confirming it with Benzinga and TradeStation combined. So that is really amazing.
And I'm a big fan of anybody that looks after our military, both current and former. That's great. Thank you very much for sharing that. I really appreciate that.
If you don't mind, also, TrendSpider has also done the same exact thing. I contacted the CEO, Dan, and he immediately said, absolutely, we will provide a coupon code for military and active duty. And, so I just thought that was amazing. They were willing to show their appreciation, and you could email me at mightysoldierstrades@gmail.com, and I can get you that coupon code for them as well.
Awesome.
And my thing is I'm at the front lines because these guys don't ask for anything, And I came out of the military in a time when I had somebody coming up and paying for my gas. I had free meals on Veterans Day and stuff. And a lot of these guys, they didn't have that. They had a totally different situation. And anything that I can do, because like I said, I know they'll never ask. They're not going to. There's just not the kind of people that we're talking about here. So I'm willing to do that. And just the fact that so many people in the trading community, when I first came around, didn't seem like anybody was really you guys took care of me when I first contacted you. You guys have always taken care of me. But,
that's a big thing for us. We like to take care of people that want to learn, and we don't care about your skill level. It doesn't matter if you're a new trader, old trader. We also definitely like to recognize our service members, both current and past. So that's all great, and I'm glad that you felt like we took you in and we actually helped you out. That makes me feel real good. So thank you very much again.
I'm guessing that you wouldn't even want me to tell how great you guys take care of me.
Well, no, I mean, I like I said, I do like, we are running out of time here, so I did want to cover a couple more things here. Again, if you have any questions, feel free to ask. Real quickly, I know we've been looking at a lot of charts today. We've been discussing, emotions, rules, trading plans, different situations. Real quick, what type of chart formations or setups do you really like? I know that you had mentioned bull flags to me before. We obviously talked about pullbacks a little bit today. So just if you don't mind, tell me a little bit more about some of the chart formations and different setups that you actually trade.
Well, pretty much, as I'd said about the halts, being able to become attuned to when a stock's going to halt before it even halts, that has been the same case with a lot of different, with the price action in general, just with the time and sales, with the level 2, looking at the trade matrix, trade ladder, and just the chart and seeing how these things are trading. And what I'm looking for, what I really like, I like to find greed. Like I said, I like a hefty, nice pullback. But I'm also looking for predictable areas of consolidation. I'm looking for areas like I said, it will bounce at the 65 EMA. So I'm going to want to take that trade if it is holding the 65 EMA. And then if it's holding 65 EMA as resistance, I'm not interested in that. If it's a bull pennant, bull flag, there's a consolidation point up there. And when you're looking at the overall chart, these things may look rather small. They may look like, why would you even waste your time going after that? But I'm talking about a 5 and 15%, 3% trade, something that's easily getting me to my 1% profit target on my entire account every day. I mean, I post my numbers on Twitter, and you'll see that I may have like some days that's 25% of my daily profit target, but then I have other days it's 300, 400% of my daily profit target.
See, you said something really important there. That's kind of the overarching thing of what we're talking about today. You followed your plan. Your plan is not to try to catch home runs and to try to catch these screamers and all this. Your plan is to try and you want to make 1% of your account per day. You want to do this in a slow and steady way. You want to hit singles. And guess what? When you are trying to hit singles and you're trying to be consistent on a daily basis, eventually you're going to hit some home runs in there. And one of the traders that I followed on Twitter, I didn't ask it for permission, so I'm not going to name names right here. But one of the traders that I followed said something that has stayed with me my entire trading career. You only need to get rich once. So don't blow it trying to, do it overnight. And the more and more I thought about that, the more and more I was like, man, this is super good advice, because you don't want to try to hit home. If you do that, if you're trying to catch these enormous moves and play all of these super risky things, it's possible that you're going to end up taking quite a beating. If
Absolutely.
you try to stick to your process and you try to be consistent and you try to hit for singles and you don't try to overextend yourself, it's going to be much easier for you to manage this. It's going to be much easier for you to show consistent gains and build up your account. It's very difficult if you start with a $10,000 account. You're under the pattern day trading rule. If you trade that account down to $5,000, trust me, you're going to be second guessing yourself. If you, trade that down to like 9,000 and then incrementally work that back up, you're going to feel as if you've accomplished something, because you did accomplish something. You were able to use risk management in a way that was and handle adversity to the point where you're in profit. So what you just said, Andy, super important. Sticking to your trading plan, not trying to do things outside of your comfort zone, definitely a way to remain successful.
And with what you just said, not trying to recover your losses, but just coming back with a better trading plan and sticking to it. Like you said, that's what's going to recover your losses. If you try to recover your losses, you're going to lose more and more. And you probably shouldn't even be a trader, to be honest with you.
Yeah. And one of the other pieces of advice that I got, and I got this when I was younger, when I was first starting, when I was interested in the stock market. And I, of course, didn't follow this when I got it. I said, you know what? I'm not going to listen to this. This is the piece of advice I got. My friend, who had been trading for a number of years, successful guy, he told me, Ryan, you need to learn how to lose money before you learn how to make money. And I thought about that for a few days, and I was like, this is ridiculous. I'm in this to learn how to make money. I'll just focus on that. Well, it turns out that if you actually learn how to lose successfully without blowing yourself up and being able to handle this adversity, winning is going to be so much easier. And that was a lesson that I actually learned the hard way. The whole leveraging down came from this. My worst trade in my career was on a biotech that I just believed the story. I believed the story, and it kept trading down, and I kept adding, and I believed and I believed and I believed, and it just didn't work out. And what I really needed at that time was I needed to learn how to stick to my trading plan. I needed to learn how to lose the small amount of money, lose the $300 so that you don't lose the $3,000 or whatever the value is, whatever percent it is. And once I learned that lesson, it was much easier. Now, if my target is I'd like to make $500 on this day trade, I'd like to make $1,000 on this day trade. If I lose 200 or 300, that's not the end of the world. I can get that back. However, if I'm really trying to get this $500 or $1,000 and I'm sticking with something that's not working and I end up having to sell at a loss for minus $2,000, now I'm even further back from where I was. So learning how to take those little losses so that you don't wipe yourself out, hugely important.
I mean, we have so much to talk about. Gurus, resistance breaks and spreads, what you just spoke of there with taking losses and how hard it is to let go of losses under certain situations. Ryan, I mean,
there's tons. Now I will say that we are over 5 minutes here. We're over by 5 minutes on our webinar today. I want to be respectful of everyone's time. Andy, you just alluded to it. We've got a lot more to cover. Let me ask you here live, would you be opposed to coming back sometime?
Absolutely. We would be honored.
You'd be honored to come back. Okay, so great. So we will have to do this again. I will have to set this up again. I really appreciate all of the questions in chat today. Andy, I, of course, appreciate you giving us your time and spending some time with us today talking about your trading strategy. I wish you and Sarah the best of luck going forward. I cannot wait to have you back. We've got a whole lot more to cover. Again, thank you, everyone. Thank you, Andy. And remember, until next time, happy trading.
Thanks for having us, Ryan.
You're welcome.
Hi, I'm Sarah with Mighty Soldiers Trades. We really appreciate your support. If you like that video, please like and subscribe. Thanks.